This is Horizon's Middle East and Africa. Our top stories this morning. The global stock rally skids as risk appetite cools ahead of Federal Reserve Chair Jerome Powell's Jackson Hole speech on Friday. US Secretary of State Antony Blinken leaves the Middle East without securing a Gaza ceasefire deal, with both Israel and Hamas signalling major obstacles remain. And former US President Barack Obama headlines the second night of the Democratic National Convention as nominee Kamala Harris and her supporters look to recapture the same 2008 electoral magic. It's just gone 8 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Jemana Basechi. Good morning. Welcome to Wednesday. And it kind of feels like the stock market could just do with a little something to hold on to before we get to Jay Powell's speech in Wyoming on Friday. We had a little bit of a pause in the stock market rally yesterday. If you hadn't had that, the S&P would have notched its longest winning streak in 20 years. So maybe it was time for a bit of a breather. You've got futures pointing higher on both sides of the Atlantic this morning. The 10-year US Treasury yield steady at 3.8% as we await those FOMC minutes later today and potential revisions to the payrolls data. We could discuss that in a moment. But Brent at $77 a barrel, still floating weaker at this level as the demand story outweighs the geopolitics and traders mull that pause in the stock market rally. Just flipping over the board towards the catalysts that could come up for markets later on. As I say, we could see a chunky revision to the payrolls data later. We've had economists at Goldman and Wells Fargo actually saying that the preliminary revisions could show payrolls growth in the year to March was at least 600,000 weaker than currently estimated. Goldman says it could be as big as 1 million. And if we flip the board over again, as I say, we're expecting the FOMC minutes later. Currently, you've got 4 rate cuts priced before the end of the year compared to 2 since June the 30th. Does this picture change by the end of the week? But let's get over to Asia now. Avril Hong's on standby for us in Singapore. Avril, what are you watching today?
Yeah, we're watching how Wall Street snapped that winning streak, and that is also playing out in the Asia Pacific. Look at the way Chinese equities and the ones in Japan are faring after a pretty solid run. And, you know, this is perhaps unsurprising given how we've been seeing this run up in the lead up to Jackson Hole on Friday. Now, a couple of things I did want to highlight as well is that among the Chinese tech names, the ones leading declines are the likes of JD.com after Walmart said that it's going to be planning this selling of a stake in the Chinese name, and this is amid a challenging environment for some of these e-commerce firms. So this is among the stocks that are dragging the Hang Seng lower today on a day where there's not that much risk appetite. Lizzie.
Avril Hong in Singapore, we thank you. Let's come to the Middle East now. US Secretary of State Antony Blinken having left the region without securing a ceasefire deal. It highlights how sharply divided Israel and Hamas remain, and he emphasised the urgency of reaching an agreement to end the violence.
Our message is simple, it's clear, and it's urgent. We need to get the ceasefire and hostage agreement over the finish line, and we need to do it now. Time is of the essence.
So you heard Blinken there. Meanwhile, Hamas pushing back against US claims that it's stalling talks. Hamas saying it is keen to reach an agreement. Well, let's get more now from Paul Wallace. He leads our Middle East and North Africa economy and government coverage. Paul, thanks for being with me. I wonder, if not Israel, if not Hamas, what or who is holding up this deal?
I think in a lot of ways, Lizzie, it's both sides. They haven't managed to bridge these various divides that have been in place for months now, arguably since the beginning of the year. There are many things that still have to be decided. One of them is the number of hostages that Hamas would release in the first phase of any deal, and linked to that, how many Palestinian prisoners would be allowed out of Israeli jails, and which ones, and how severe their crimes would be, and so on. The latest big sticking point that's come into play is what's called the Philadelphia corridor, which runs along the south of the Gaza Strip, alongside the the Gaza-Egyptian border. Israel wants to retain troops there. It says those are essential to stop smuggling of arms and various other things from Egypt into Gaza. Hamas doesn't want that, and it seems that Hamas feels that Israel has changed its position on that since the latest proposal was first come up with in late May, this US-led proposal, and Hamas is arguing that Israel is sort of reneging on what the initial proposal said. Israel is saying that is not the case at all, and it's accusing Hamas of being obstinate. But the point is there's still big gaps between the sides.
Yeah, so if new sticking points are coming up, maybe actually the talk's going backwards, despite the rhetoric at the high level. I just also want to ask, every day we kind of ask ourselves when that Iranian strike is coming. If there's no deal yet, does it mean that it's actually more imminent?
This is the big question. And some people have argued that even if Blinken didn't get a ceasefire deal over the line, and clearly he didn't manage to do that, one of the things he might have achieved is delaying and stalling an Iranian attack or a massive Hezbollah attack on Israel. The thinking being that Iran would want to wait for the ceasefire talks to progress, and it has welcomed those talks. Iran, however, has said that it is not the ceasefire talks and its potential retaliation are two different things. One thing it did say yesterday, which was slightly new, is that it said time is on our side, and it said it can bide its time before a retaliation. I think that's something that Iran likes because it keeps Israel on edge. It stretches Israel's military, keeps it on high alert. That's something Iran wants. It is possible that we don't get any retaliation from Iran at all. And one thing that might persuade Iran to go in that direction is a ceasefire deal if it comes about. If there's a collapse in the ceasefire talks, I think a lot of analysts will presume there's a higher chance of Tehran carrying out that retaliation.
And of course, we've learned the power of the threat of surprise in Eastern Europe recently. But Paul Wallace, we thank you, leader of our MENA economy and government coverage. Now, let's get to the US politics. Former President Barack Obama saying that America is ready for a new chapter as he headlines day 2 of the Democratic National Convention in Chicago. Obama says the world is watching and the nation needs a new leader who cares about the people.
We do not need 4 more years of bluster and bumbling and chaos. We have seen that movie before, and we all know that the sequel is usually worse. America's ready for a new chapter. America's ready for a better story. We are ready for a President Kamala Harris.
So the Democrats want to go right back to 2008. Let's go to Vonnie Quinn for analysis now. She joins us from Washington. And Vonnie, it's interesting to see Kamala Harris actually bringing in White House veterans from the Obama campaign. I wonder, she's a person of colour trying to build a multi-ethnic coalition. Is it wise to bring the vets back, given how much the electorate potentially has changed in 16 years?
Well, when you think about it, Lizzie, there are only 78 days left between now and Election Day. So in one sense, not only is it perhaps wise, but it's perhaps urgent. And after all, this team has already, as you said, put a person of colour into the White House. They need to do it again if they want Kamala Harris to win. And therefore, perhaps following the same playbook is a wise choice. So you have the person who actually ran the 2008 campaign, David Plough. You also have a former communications director from that time, an advisor. And as we already know, we have, Brian Deese and Gene Sperling on the economics team. They have Barack Obama experience, but also Brian Deese with Joe Biden as well. So it is a kind of an amalgamation of the two teams. Now, whether they'll all get on together at Kamala HQ in Delaware remains to be seen. That's where Joe Biden had his headquarters before he...
And meanwhile, we've had Donald Trump casting himself as a purveyor of common sense. And we've had Tim Walz and Kamala Harris calling him and J.D. Vance weird. That's a quote. I wonder whether you think that'll be an effective counter.
It's already effective, Lizzie. It seems to be needling him quite substantially. They lean into this weird trope, and he's been coming back with something that's very unusual for Donald Trump, saying, you know, I'm actually very level-headed, I'm very sensible. It doesn't seem to go with his personality when he says that, but he was campaigning again today and repeating those assertions. He was in Michigan. He was actually in Howell, which is where there had been white supremacists marching last month. Not a fantastic look for the former president. He was at a sheriff's office trying to make Kamala Harris look weak on crime, but he kept saying, I'm not a radical at all, I'm just a common sense person that was successful. This from somebody who has, you know, said in the past that he's successful because he, you know, pulled himself up from the bootstraps. So yeah, it does appear to be needling him, and you know that he's just going to continue on with this rhetoric as he moves through more swing states such as North Carolina and Arizona.
All right, Bonnie Quinn, we thank you. As you continue to watch for us, the DNC out of Chicago, we thank you for the update. Now, to some breaking news across the terminal, we have the latest results from Geely. We have first half net income coming in at 10.6 billion yuan. The estimate was for 1.57 billion yuan year on year, so a beat there. And of course, we had the news already that the EU is planning to introduce an extra 9% tariff on these vehicles imported from China. So, of course, to try to counter subsidies from Beijing. Interesting to factor Geely's results into that story. It's raised its annual sales target to 2 million units. It's raised its annual sales volume target, and the interim dividend per share is 0 Hong Kong cents. So we keep an eye on those shares this morning as we get plenty of China automakers results this week. But still ahead, we've got a market outlook to bring you from Deutsche Bank as investors' risk appetite cools ahead of Jay Powell's speech at Jackson Hole. We'll speak to Stefanie Holtze-Jen next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, traders are taking on a record amount of risk as they bet big on a bond market rally fueled by expectations of the Fed starting to ease. JP Morgan Asset Management says once the cutting cycle begins and money markets return to start to slide, yields could get down to 3%.
Everyone is looking for a way to get into the bond market and frustrated beyond belief because they never got to buy at yields of 5 to 6%. And once rates start coming down and money market fund returns start to drift lower, that money will come in.
Well, let's bring in Stefanie Holtze-Jen, CIO for Asia Pacific at Deutsche Bank. Good morning, Stefanie. I wonder, given what we just heard there from Bob, given the hunger in the market for rate cuts, is there anything Powell can say on Friday that won't disappoint traders?
Well, we've been here before. The market has started to price rate cuts last year. Had already planned for 6 to 7 cuts beginning of the year, swung all the way around mid of this year to even talking about rate hikes. And now here we go again, talk about quite outsized cuts. So, you know, we're going there for real. Our forecast is that September will be a live meeting. The market is also likewise set on that this is the date. The question is it 25 or 50 basis points? And of course, Jerome Powell's commentary will be scrutinized on what's the path afterwards. So there is a lot that could disappoint the market. So we think right now the market's still pricing about 3 to 4 cuts for the until the end of the year. Could be disappointed because we see much less. We have only 3 cuts over the whole forecasting period that we have of 1 year. So there could be some more repricing happening. And let's not forget last week, the market had been expecting 5 even more cuts and even an intra meeting cut as well. So yes, Jerome Powell could disappoint some of the traders, but I think the markets come to more of a realistic scenario as we go in than it was last week, for instance.
OK, so the market too aggressive. I wonder how much of a correction you expect today off the back of the FOMC minutes, but perhaps more importantly, the potential revisions to the payrolls data. Do you expect a lot of volatility today?
Well, overall, you can already see the Asian market has already started to take back a bit of that risk on that we have experienced over the past few days. So there's already some anxiety. I think one part is the FOMC revision, payroll revision that you were talking about, but even a weekly jobless claims is now getting scrutinized, of course. But more importantly, really, we should look through those shorter-term releases and then wait for Jerome Powell's commentary on Friday to take more clues going forward. Not to leave out that, of course, there's lots of data to be digested until the next Fed meeting takes place in September. So we have core PCE, we have another non-farm payrolls, we have inflation data coming, and so all of these, real economic data need to be digested as we go closer to the date.
Well, just pivoting to the fiscal, we were just hearing from our reporter Bonnie Quinn talking about the Democratic National Convention. We've had Kamala Harris proposing this corporate tax hike. Do you see that as off-putting for investors, or actually is it kind of to be encouraged that someone wants to deal with the deficit?
Well, right now, with the U.S. election campaigns being in full swing, this is where a lot of volatility comes through. So as you said, every day we get new campaign rhetoric, and it's actually quite difficult for the market to quantify the exact outcomes that this could be, and also in regards to the probabilities, because you also need to be able to really get some of these proposals through the House and Congress in some instances to have these come into reality. So we take a bit more of a qualitative approach, and we look at the sectors that could enjoy more of a tailwind, given the Republican or the Democratic agendas that could be pushed forward going forward, and cut through that noise that we're going to hear more of and hearing right now during these conventions and the campaign rallies.
OK, so which sectors are you looking at? I wonder whether a Trump presidency could be more beneficial to the US consumer, for example.
Well, the Republican agenda is, for instance, will bring more tailwind on a deregulatory perspective, and maybe, important for the financial sector. More so, I think we already have seen that the energy sector could be profiting more, the tech side of things, whilst on the flip side, the Democratic agenda follow through on some of the measures that have already been put forward around affordable care, and also investments around the Inflation Reduction Act, where you invest into sustainable energy, will then benefit, for instance, healthcare, sustainable energy, EVs, renewable energies, etc.
I mean, just finally, of course, there's also an impact of the US election for China. We've had this bad raft of data already last week. What's your outlook for equities there?
So in terms of the Chinese equities outlook right now, I want to highlight something that I thought was an important takeaway that we got after the recent sell-off in equities market a couple of weeks ago. Because what drives the market is, of course, fundamentals, and we can talk a lot of those in details and have been doing so, but also its positioning and sentiment. So when we had the Nikkei and the US market and the European market selling off quite heavily, the standout was really that the Chinese market and also the tech-heavy Hang Seng and Hong Kong market has not been selling off to the same tune, even was in the positive during that day. So I think we also have to look at it from a fundamental valuations, but also positioning and sentiment seem to be so low, and sentiment still being so negative, that this may provide an opportunity, and it's being talked about and looked at by the client base we talk to.
All right, Stefanie Holtze-Jen, CIO for Asia Pacific at Deutsche Bank. We thank you for your time this morning. Great to have you with me. And coming up on the programme, we're going to talk about Mpox. Vaccines desperately needed to halt the spreading virus are soon going to arrive in Africa. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, Mpox vaccines are expected to arrive in Africa in the coming days as the new strain continues to spread from the Democratic Republic of Congo. The Director General of Africa's CDC says stopping the continent's outbreak will save lives in the rest of the world. Bloomberg's Chief Africa correspondent Jennifer Sabasaja joins me now for more. And Jen, what more have we learned from the authorities yesterday?
Well, Lizzie, I mean, Tuesday was really an opportunity, it seemed like, for health authorities to try to dispel any sort of concerns, at least that what we're seeing from Mpox is similar in any ways to COVID. We did hear from the World Health Organization saying that new or old strain of Mpox, this is different. But of course, there is still concern that there could be a repeat of mistakes and neglect that we saw in the past, of course, as we continue to see more and more cases. And just on that, we did hear this morning that Thailand did find its first suspected Mpox clade 1 case. And so, you know, authorities just want to make sure that what the focus is now is just to make sure that, you know, the panic and the neglect that we saw in the past is avoided. And the way that they say we could do that is dispelling any sort of rumors about there needing to be travel bans, dispelling any sort of rumors at this point in time that there needs to be masking or anything done, and really focusing in on the vaccine distribution. And that is really what we've been hearing more and more health authorities try to stress, that this is the way that we are going to prevent this from becoming a global, an even bigger global health emergency than it is right now.
Well, do we have any indication about which vaccine manufacturers are going to provide these doses?
Well, it's interesting because this disease, I think we need to remember, it's been around for quite a while, but we are hearing a lot of these manufacturers now saying that they have interest in developing these vaccines. So we did hear from Roche, who has expressed interest, also Emergent Biosolutions, also South Africa's Biovac Institute has also expressed their own interest. But it's important to know it is different to express interest versus actual distribution. And on the distribution front, we have heard from Bavarian Nordic, who says that they are in talks with Africa's CDC in order to get the vaccine doses to the African continent. But we need to remember that there's at least 10 million doses that are needed. They're very expensive. And again, like the mistakes that we saw in the pandemic, Africa was at the end of the queue. And so authorities want to make sure that, yes, this is good that we're expressing interest, but we need to make sure that these low and middle income countries who can't necessarily afford some of these expensive vaccines are potentially subsidized and given other support measures to ensure that people are vaccinated.
Yeah, learning from the past, but also a test for the next major pandemic, perhaps. Jennifer Sabasaja, we thank you for bringing us the latest there as we look to equity futures pointing higher on both sides of the Atlantic. We've got Brent trading at $77 a barrel, weaker 0.1%. We're going to bring you more on the Middle East next. A solid year for sovereign wealth fund PIF in Saudi. We'll bring you the latest on what boosted the returns next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. The global stock rally skids as risk appetite cools ahead of Federal Reserve Chair Jerome Powell's Jackson Hole speech on Friday. US Secretary of State Antony Blinken leaves the Middle East without securing a Gaza ceasefire deal, with both Israel and Hamas signalling major obstacles remain. And former US President Barack Obama headlines the second night of the Democratic National Convention as nominee Kamala Harris and her supporters look to recapture the same 2008 electoral magic. It's just gone 8:30 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Jemana Pasechi. Good morning. Welcome to Wednesday if you're just joining us. And it seems that traders took a little bit of a breather yesterday. That stock market rally would have been the longest streak in 20 years had it not been for yesterday's pause. But you are looking at futures pointing slightly higher this morning on both sides of the Atlantic. The Treasury yield on the 10-year steady at 3.8% and Brent at $77 a barrel as the rally feeds in, the pause in it, but also as the demand concerns outweigh the geopolitical tensions. Let's just flip over because I want to show you some of the catalysts catalysts potentially coming up today for traders. We are potentially looking at revisions to the payrolls data. So you can see the current estimates, but Goldman says we could see a revision as big as 1 million. Goldman and Wells Fargo looking for 600,000, the number that the payrolls could be weaker than currently estimated. And if we flip the board again, we're waiting for the FOMC minutes as well, potentially more clues as to the rate path ahead. At the moment, you've got traders pricing in 4 rate cuts before the end of the year. That compares to 2 since June the 30th. But do we see this chart really shift by the end of the week, when we'll also, of course, have Powell's remarks in Wyoming? Let's get now to Asia. Avril Hong's on standby for us in Singapore. Avril, what are you watching today?
Well, we're also going to be watching that potential downward revision in the payrolls numbers out of the U.S. And amid all this, it is a risk-off day. But Chinese EV makers are also in focus. You got the EU and Tesla as part of the mix, but it's really about earnings for now as well. We are in the lunch break, but already coming into today, we had XPeng, its guidance missing. It's very competitive among these EV makers. There is a price war going on. Then Geely's earnings drop. It was a big beat, and we saw that record first half profit, and it shows you how that strategy is helping it to pull ahead of the pack. Xiaomi earnings are also due later today, so we're going to keep a close watch on some of these EV makers. Lizzie.
Avril Hong in Singapore, we thank you. But I want to come back to the Middle East now and turn specifically to Saudi Arabia and its sovereign wealth fund, the PIF. It saw its higher returns, I should say, last year, and that was driven by its international portfolio. As a result, the fund's assets under management have grown to $760 billion. So let's dig into the details now. We've got Matthew Martin, our senior reporter for Middle East wealth funds, joining me in the studio in Dubai from Riyadh. Matthew, I wonder how good the returns have actually been, or whether they're just riding the global rally.
Well, yeah, so the annualised returns since 2007 have gone up, since 2017, have risen from 8% last year to 8.7%. Now, as you say, a big part of that is being driven by these global returns. The PIF's had this big portion of investments that have gone into some of the tech stocks in the US that have had obviously performed brilliantly over the past couple of years. So that's really driven these returns. The thing that the PIF is probably where it underachieves some of the other sovereign wealth funds in the region is that it's slightly different from people like ADIA in Abu Dhabi or the QIA, and that the PIF has this big domestic focus. So it's sinking a lot of capital into investments inside Saudi Arabia, which are not yet generating big returns. And the hope is that as these things come on stream, that those return numbers are going to get much, much higher. But a lot of that, of course, is a big bet on Saudi Arabia's diversification. And, you know, we've seen the PIF playing less and less of a prominent role internationally than it has done in the past. So it's going to have a tough balancing act now of where it's going to be able to generate those returns from in future.
Well, yeah, what do analysts say about what the returns look like as it continues to shift towards that domestic focus?
Yeah, and you see some of this starting to show up in the figures that they published for 2023 already. They're saying that the domestic asset portfolio is growing. Since then, they, of course, got this big slug of Aramco. They got another $160 billion stake in Aramco. So that portfolio mix is tilting towards Saudi Arabia increasingly. And as we get these projects like NEOM that are going to suck up lots and lots of capital, and those are big, big gambles that are very, very uncertain as to when or even whether returns are going to come from those. And so that's going to be the key thing for the PIF, is that can it manage to turn a lot of this investment into productive assets at a time when it's decreasing these stakes that it has had in the US.
Yeah, and part of that inward look, I read, is that they want to start their own new cargo airline, you know, imitating others in the region. I wonder what that would actually mean for the likes of Boeing and Airbus.
Yes, I mean, as you say, and as we were talking about this diversification story in Saudi Arabia, transport and logistics is a big part of that. So the PIF has seen the success that Emirates has had and Qatar Airways has had, and it's trying to get a piece of that pie. So we had this story yesterday that it's out. It's talking to the big carriers, Boeing and Airbus, potentially for big new plane orders to try and establish this cargo airline. to try and get a piece of those trade routes that are flowing between Asia and the West. And so it's really trying to position itself to be able to capitalise on those trends.
All right, Matthew Martin, we thank you for that update on Saudi's sovereign wealth fund, the PIF. Now, for a look at some of the other stories we're following this morning. Qatar Airways has bought a 25% stake in South African carrier SA Airlink for an undisclosed amount. The Doha-based airline aims to bolster its Africa growth strategy, and it's not the carrier's only acquisition on the continent. Qatar is also finalising a deal to buy 49% of Rwandair and a majority stake in a new airport being built near Rwanda's capital. In other news, the European Union says it plans to introduce an additional 9% tariff on Tesla cars built in China. The measure could take effect in November and aims to counter subsidies Beijing provides to the industry. The Tesla rate would be lower than the 17 to 36% hike that's been proposed for fully Chinese automakers. And in other news, Netflix shares have hit their first record high in nearly 3 years as investors embrace its strategy to improve profitability. Tuesday's gain in New York surpassed a level that had stood since the peak of the streaming pioneer's COVID-era success. In a sign of its growing advertising might, Netflix also disclosed a more than 150% increase in upfront ad sales commitments compared with 2023. And JD.com shares fell in Hong Kong after Bloomberg revealed its biggest shareholder Walmart is selling its stake. The US retailer is said to be offering some 144 million shares for as much as $25 to $85 each. That would raise around $3.6 billion and end an 8-year partnership between the two companies. Well, those are some of our top stories on the terminal this morning. But coming up on this programme, the Pentagon says Ukraine and Russia could be heading to a stalemate as winter approaches. We'll bring you all the details next. This is Bloomberg.
This week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance August 23rd at 9 a.m.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, the Pentagon's intelligence agency says that Ukraine and Russia both lack the military assets to mount major offensives against each other. The Defense Intelligence Agency report suggests the two sides are headed towards stalemate as Ukraine continues operations in Russia's Kursk region. For more, let's bring in Bloomberg's Tony Halpin, who leads our Russia economy and government coverage. Good to have you with me, Tony. Kyiv is saying that it's waiting for deliveries from some of its NATO allies. I wonder whether, if the delays continue as we look ahead to winter, how that's going to affect the conflict.
Yes, well, I mean, that report was slightly overtaken by events because it went up to June 30th, and as you've seen, we've had the incursion into Kursk since then. But the bigger point remains, which is that Kyiv is very concerned to receive air defences to guard its cities against Russian attacks, and particularly in winter, because Russia targets energy infrastructure. It's part of a campaign to really try and break morale in Ukraine by simply grinding people down, wearing people down when it's cold and dark in winter. Kyiv is anticipating this for a third winter, and so it wants its allies to install as much as possible the air defence systems that were promised so that they can protect their own populations.
And we're also expecting the Indian Prime Minister Narendra Modi to pay a visit to Kyiv on Friday. He's ruled out a role mediating between the two sides in the conflict. So what role do you actually expect him to play?
Yes, well, this is actually his first visit to Ukraine since the war began. And he was in Moscow last month visiting with Vladimir Putin, which somewhat irked the US because they've been urging him to put pressure on Putin to come to the table and bring an end to this war. So I think Modi in some ways is trying to repair relations by showing that he's even-handed. He's coming to Kiev to talk to President Zelensky. And also I think he wants to present himself as a potential mediator in providing messaging between the two sides. I don't think they want to play a role of actually trying to bring a negotiated settlement to this, but they do see themselves as playing a role as a representative of the Global South. Most of the Global South nations have kind of stood aside in this conflict, have tried not to take sides, but Modi is a big player, India is a big player, and they want to be seen to have some role in trying to resolve this conflict.
Interesting also to think about the role of China. But I also want to think about this region, Africa in particular. We've seen Russian forces in Mali. How do you see Ukrainian support for military action against those Russian forces actually increasing?
Yeah, well, Mali broke relations off with Ukraine because they accused them of having a role in an attack there against Russian Wagner forces, which Ukraine denied. But clearly, Wagner is quite active in Africa. They have relations with a number of states there, partly providing security in return for access to minerals and things like gold. So it's a financial relationship in many ways. But it's leveraging Russian influence in Africa, which again is another key area of the global south. There's competition between Ukraine and Russia to win over public opinion and to win over the opinion of governments in that region in order to try to leverage the other side into coming to a settlement. So I think it's part and parcel of this competition for influence that Ukraine is sort of challenging Russian power there as well as elsewhere.
Yeah, you kind of wonder whether it's a proxy war that's being missed by the West to some degree.
Well, I mean, Ukraine probably doesn't have the forces to make any kind of long-term commitment there, but I think it's quite possible there might be special forces anticipating some kind of action there, yes.
All right, we'll keep an eye on it. Tony Halpin, we thank you for the latest there. And now let's get to some of our other top stories this morning. The Italian Coast Guard says it's unlikely to find any more survivors from the sinking of a luxury yacht off Sicily. It means the British tech tycoon Mike Lynch, Morgan Stanley International Chairman Jonathan Bloomer, and 4 others are presumed dead. The yacht was hit by a violent storm early Monday, with Lynch, his family and associates on board, celebrating his acquittal in a long-running fraud case. Well, coming up on this programme, the world's biggest shipping centres are caught in the crossfire of geopolitical conflict. We'll bring you more on today's Big Take next. This is Bloomberg.
This week, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all week on Bloomberg Television.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. To my favourite topic now, chocolate. Cocoa prices. They've reached eye-watering levels this year as challenges including disease and climate change and low farmer pay impact producers across West Africa. Despite this, Ghana's ditching plans to borrow from international banks to fund its cocoa crop in the next season. Let's get more now from Bloomberg's Ondiro Oganga. She joins me from Kigali. Ondiro, what's behind Ghana's decision to ditch the foreign funding option?
Lizzie, we're hearing from the cocoa board in Ghana, and they're saying the reason is they want to win themselves off annual syndicated loans. We know that they were trying to have conversations with cocoa traders such as Olam to secure a bridge loan after talks with foreign lenders to secure $1.5 billion told. And this has been part of their routine previously, where they secure $1 billion annually, and it goes into buying of seedlings, fertilizers, chemicals, and also paying of farmers. Last year, they were only able to get $600 million because Ghana was in the middle of debt restructuring, and hence their credit appeal wasn't really good. What happens now is the Bank of Ghana, instead of getting the lump sum it gets, it will have to wait until they begin selling their beans to be able to get some money, show up their dollars and build up their reserves so they can show up their CD. And this is based off of the fact that the cocoa beans have also been having a really great run in the market. They began the year at $4,000, peaked at $11,000, and now cost is correcting at about $7,000.
So what's changed in the ecosystem between April and now? And importantly, when will I get my cheap chocolate?
Well, Lizzie, a couple of things have changed. One of them being the focus of good weather. If we look at Ivory Coast, it's being predicted that the output could be more by at least 10%. If we zoom in on Nigeria, the promise of good prices in the international market is attracting more farmers and more beans into the market. They're expecting output to grow by 15,000 tons to 285,000 tons from the previous 270,000 tons. But to your question on when cocoa is likely to be cheaper, it's not anytime soon, because there are a couple of legacy issues that are hindering supply of cocoa beans into the market. One of them being climate change affecting weather. We are seeing cocoa farms being flooded. There are also diseases that are affecting cocoa trees, forcing them to be cut down. And also cocoa farmers have not been making good returns from their process. They're making a third in Ghana and Ivory Coast as compared to more liberal markets like Nigeria and Cameroon, and a sixth of the current market value. They're unable to reinvest back into their farms. So supply is not going to get to where we need it to be to match the demand that we are currently seeing in the market. So the equilibrium is higher prices for the next year or two, because even if they start planting cocoa trees now, they take at least 4 to 5 years to begin producing pods.
Well, exactly. These are long-term challenges, long-term solutions. I wonder how far away the fixes are, what we can expect from the market as the course corrects.
What we can expect is we are likely to see the prices remain at that 7,000. Fitch is forecasting that by December the prices will still be at $7,000. What we are also expecting is that corporates are likely to begin cutting down on costs. They are likely to automate processes that they can automate and cut down on human costs, because they're trying to manage their books and cut down on expenses. We're also likely to see the reduction of cocoa content in some of these products, and also something that is called shrinkflation. So your chocolate might not be as big as you're expecting it to be. There are also other hurdles before it gets better, such as EU-DR rules, where cocoa cannot be grown on deforested land and make its way to the EU. So a lot of work needs to be done before the 29th of December to map where the cocoa is coming from. So it will get harder before it gets better.
Just in time for Christmas. Sondiro Oganga, we thank you for that update. And I want to stay with the theme of trade, because the push for digitalisation, automation and decarbonisation means that global ports face a $2 trillion reckoning as they become pawns in the geopolitical power struggles we've been talking about. And this really is the subject of today's Bloomberg Big Take. It looks at how ports have turned into strategic battlefields. Well, let's talk to our senior economy and government reporter, James Mager. He joins us from Beijing on more of this big take. James, just talk to us about how the ports are jockeying for influence in these volatile regions.
So there's a few sort of different things that are going on here. The first is, as you mentioned, sort of geopolitical tensions have risen, and that is obviously playing across trade. The US is trying to restrict exports of certain goods to China, and there also is an effort by the US and some other countries to try and restrict China's purchases of port licenses in other places in the world. In Europe, for example, in Australia. In South America, the US is pushing back against a new Chinese port that has just opened. And so ports are becoming sort of a pawn in these geopolitical tensions, because they are so critical for trade, as we saw during the pandemic, where you saw massive queues at ports in the US and other places where the infrastructure that was available couldn't keep up with the demand for the goods, But there's also, there is still increasing trade, and there is still countries that are looking to build new ports and build new infrastructure as they try to export their way and to increase their exports and increase their manufactures. India, for one, is a good example. It doesn't currently have a deep water port that's capable of taking the imports and exports from China and other places, and so a lot of those are transshipped from Singapore and elsewhere. So India is in the process of building a new port that will hopefully allow it to move up their value chain and export more high-value goods.
So that's interesting. There's still potential to mine. I do wonder, what about their commercial ambitions? They all want to show their manufacturing prowess.
I mean, trade and ports are an integral part of trade, is a critical part of manufacturing, and many countries around the world are looking to increase their manufacturing sector so they can increase their exports and get more foreign currency, hard currency. I think China is the example par excellence of that, where the rise of China and the rise of China's manufacturing sector has been inextricably linked to its rise as a global exporter. And I think the port in Shenzhen, which we look at in the story, is a great example of that, where you have a new port which is being set up, or a new terminal in a port which is being set up purely to export cars from a factory which is being built right next to the port. So Chinese company BYD is building a new factory, and it'll take 5 minutes to get from that factory to the port. The BYD is building ships, and those ships will take those cars all around the world to Europe, obviously, the topic of du jour with the new tariffs on Chinese EVs, but to other places as well, to Thailand, to Australia, to South America and Africa. Anywhere that wants Chinese EVs, which are the best in the world and often the cheapest in the world. These kind of things, these kind of new ports will be supporting those efforts. And again, India is a good example of that. Another port just been built on the west coast of the Pacific coast of Peru. Is again an attempt by the Peruvians to expand their exports and also make it cheaper to ship into South America. So this kind of investment is inextricably linked to people's efforts to boost their economy and boost their manufacturing sectors.
All right, James Mager, we thank you for bringing us a preview of that big take. It really is worth a read. I love ports. A physical example of trade in action. Well worth a read on the terminal. We're looking at markets pointing to a higher opening when it comes to the futures picture. Wall Street futures higher about 0.1%, nearly 0.2%. Euro Stoxx 50 futures higher 0.2% as we approach the cash trade. You saw a bit of a pause in the S&P's rally yesterday, but as we get towards Jackson Hole, it looks like we're going to see a bit more of a risk-on mood today. The 10-year US Treasury yield is currently steady at 3.8% and Brent at $77 a barrel, so still a touch weaker. That demand story continuing to outweigh the geopolitical story that we've been reporting for you in both the Middle East and Eastern Europe. But we'll dive deeper into all of it in the next hour. This is it for Horizons Middle East and Africa for today, but I'll be with you for the next hour. It's Daybreak Europe, and we'll dive deeper into all of that as well as the story on Tesla and those tariffs. So stay with us. This is Bloomberg.